So thanks, guys. Today I'm going to be talking about options, kind of my flagship program called Swinging for the Fences. So let me just get into a quick, I'll just kind of zip through a risk disclaimer and we'll get on to the presentation. There you go. So here's my big promise today. So I've taught hundreds how to trade options, and I've taught them how to trade this exact way. And the comments I usually get is wow, I didn't know you can do that, or wow, why don't others teach like this? So this is going to be the foundation of exactly how I trade options, exactly how I teach options. And I've broken this process down, and it's been proven to help others. So many have called it a paradigm shift. So I'm not asking you to believe anything just yet. All I'm asking is keep an open mind. This works, but I'm going to make the assumption that it's very different than how you approach the markets. So here's what I'm going to show you. Today, I'm going to show you how to find and buy low-priced options. We're putting ourselves in position for awesome returns without the need to stare at the market all day. Me personally, I think staring at the market all day, at least for my style of trading, it hurts because it invites emotion into the trade. So I want to encourage students to make good decisions, trust the work that they've done, and then the market's going to do what the market's going to do. It's like forced discipline. And that way you're not glued to the screen all day because, again, it could be a waste of time. So this presentation today, guys, it's all about buying the little stuff. We're looking for options that are priced less than 50 cents. And just to be clear, quick overview, especially for anybody who has no options experience at all, if you buy an option for 30 cents, as an example, and you buy 10 of those, your risk is $300. You can never lose more than that. You could buy one for $30 and you can never lose more than that, and the upside is unlimited. So throughout this presentation, I'm going to show you proof about my background, proof about clients who have had great success, and proof about trades that have worked and that we use. So here's Steven. Steven's a stay-at-home dad. We've been working together for over a year, and Steven's a sponge. But best of all, he came to me with an open mind, and now he's found a consistent, reliable approach he can use to trade options. So let me first go over why I'm qualified to teach you about options, because if I was in your shoes, that's what I'd want to know about. So I've been trading for 18 years, not marketing, not sales, just pure trading. But where I really learned about options, where I really got to see how the options market works, was when I was a market maker on the floor of the Chicago Board Options Exchange. So for your comfort, these are some things that I've done. I was an options market maker for 4 years, trained over 100 professional traders. As an options market maker, concurrently trading 100 names and thousands of strikes at the same time. Also a portfolio manager, and in my free time, I like to do endurance events. So I share my background just so you can see that I'm an expert in this area, okay? There's a lot of kind of nonsense overall on the internet. I make my living taking money out of the markets. So here's what it looked like when I was back in the pits. And thank goodness I don't have to stand around like that all day anymore. But we did it, and we did it because we had edge. And edge is what makes you different. So every trade you make, you need to think about what was your edge? What was the reason why you got into that trade? So what I'm going to do today is I'm going to explain why this trade that I'm going to present has so much edge. So now I just want to say too, congrats on being willing to learn. So this isn't a trick or something you can use once. I'm going to teach you how to trade options, and you'll use this approach forever. So let me just get a feel for the room. Who here trades options, and who here has never traded options before? So yeah, I've traded, or no, never before. And I'm going to keep going just as that feedback comes in. Many don't trade options because they think it's confusing. And let me tell you, like anything, if taught wrong, of course it's confusing. But what we want to do is simplify, because it's not about what I know. It's about helping you be in the strongest position to succeed. And the options market presents really good opportunity in trading. Also, what I want you to understand is when you look at options or when you look at stocks, they're the same thing. I really believe and I really want you to understand that options are just a derivative of stock. It's really the same thing. And right now, the options market is notionally bigger than the overall equity market. So it's really important to learn, and it's a great way to find cool trades and to help manage your risk. So buying options, that's what we're going to talk about. It's really straightforward. Whenever you buy options, you're long volatility. You're long movement. You want craziness to happen. Whenever you're short options, you want things to be really quiet. You want things not to move at all. For me, I hate risking $5 to make $1. I hate it. I want to risk $1 to make $5. So think about that. Would you rather risk $1 to make $5 or risk $5 to make $1? Even if you did that over a year period and have the exact same results. For me, doing this for a living, it's just a lot more relaxing investing $1 trying to make $5. Because when you invest $5 to try to make $1, and I've done that before, I feel like every morning I would wake up and turn on CNBC and all I would be thinking about is, no, oh, please, I hope there's not any bad news. I hope there's not any bad news. And that's what happens when you only sell options. Most people are taught to sell options because it's easier. I can present about selling options and you can make money 99% of the time. But that 1% of the time, guys, you should be absolutely terrified. You don't want to make money 99% of the time because of the risk that would come with that 1%. So let me walk you through an example because I think this will show how I'm different. And especially, seeing the feedback, definitely a lot of traders on here who trade options. So see if this makes sense for you. And if you're trading options without an understanding about what I'm about to show you, hopefully you can see you're taking a lot more risk. So ABC stock, this is just a phony baloney example. Stock's trading at 10. The 12 strike calls. Let's say the 12 strike calls are trading for 40 cents. We could buy 10 of those. It's $400. We can never lose more than $400. Even if ABC stock goes to 0, we can only lose $400. We could buy one, $40. That's our risk. How I teach options, how I want you to think about this position is if you buy 10 of the 12 strike calls in ABC, think of that as you're long 1,000 shares from 12. Because that's really what it is. The stock's trading at 10, you're making a decision to buy 1,000 shares at 12. It's costing you $400. Why would you want to buy 1,000 shares at 12 if the stock's just trading at 10? Because you get leverage, right? You get massive, massive leverage to do that. Now watch what happens. Stock's at 11, stock's at 13, stock's at 14. Right now, if the stock's at 14, and for you option traders out there, what would you do? The stock just runs up to 14, you're long 12 strike calls, and let's say you're up some money, right? You're up money on this trade. You want to lock in some money. You want to take some risk off the table. What can you do? What are some things that you can do? Long 1,000 shares from 12. If the stock's at 14, you're up $2 minimum. There's also premium, but at a minimum, you're up $2. So if you invested 400, this position is now worth at least 2,000 minus 400, at least 1,600. But what can you do to get out of this position, to lock in some profit? Maybe we want to still keep our upside. Okay, yeah, we could sell calls. Cool. There's 3 things that we can do. 1, we can roll it into a spread. So we could sell calls. Okay, long long the 12 strike, we could sell the 14 calls or the 15 calls. What else can we do? We could just get out of 5 of them. Hey, we're long 10. Let's get out of 5. Let's lock in some money. Now we're just playing with the house's money. Cool, that's fun. What I teach, what I want my members to do, Brad, this is just an example. Brad's saying, how often does the stock make a 60% move to the upside in just 5 days? I don't know, Brett, this is just an example. I think in this example, we're talking about a 40% move. It doesn't really matter, not really part of the conversation. But what you can do, and what I teach, you don't want to give up your optionality. You don't want to get rid of your calls. What you can do is you could sell the underlying stock. So if you're long 10 calls from the 12 strike, also think of that as being long 1,000 shares, you could sell 300 shares at 14. You could sell 300 shares at 15. That's how I want you to manage these positions. That's the best way to lock in profit while still keeping yourself in position for awesome upside. But the key is, and I'm going to say this often, you're never losing your optionality, because that's what you paid for, that's what you want. And that's the difference between, one of the differences between how I teach options. If you hang out to the end, I'm going to share something really special. It's definitely not for everyone. This takes commitment, but for those who really want a solid options education, you'll love it. And I can't wait to work with you. So I'm going to do something special because I think this is going to be most of your first experience with me. And I'm doing this because I see a lot of my clients, they want to learn, they're willing to learn, but if you learn the wrong information, you can work as hard as you want, and it's really not going to push you forward. Options are straightforward, and I can teach them to anyone. So at the end, for those inspired by the information I share, I'm going to make a commitment to you, and that commitment is going to include a lifetime of live classes. So you're never alone. So you're never left out in the cold trying to learn this on your own. And for some of you guys, the offer will make absolute sense, and that's great. On the other hand, I just want to throw out there, if it doesn't make sense for you, I appreciate you coming and hanging out with me today. What my goal is, I want you to understand these specific trades make sense. I also want you to understand that others have committed to this process and are no longer searching for the best approach to trade options. So with that being said, think about the benefits of buying little options, investing small for huge returns, being in a $300 trade where you can capture awesome upside. Imagine this, maybe the market starts getting hit and you own a few $100s in little puts. Your overall portfolio is getting killed, but all of a sudden those little puts are worth $5,000 or $10,000. Does that even seem possible? Or are you thinking, no way, this guy's crazy? Maybe it's investing and getting a 600% gain like Kelly did here, or Thomas with an 800% gain, or even Mark with a 2200% gain in a stock called YRCW. This is Mark's exact trade. Right here, YRCW got demolished after earnings. They got hit so hard they were down 50% intraday. I was on the conference call. There was no accounting issues. It was just bad earnings. Sent out an alert to buy November 10 calls and the November 9 calls. That's what Mark was able to do. He bought 100 calls for 9 cents. That's $900. Ended up making over $20,000 on this one trade alone. That's fun. That's why we do those little options. Does this feel like you? Because here's another thing clients are sick of: spending more and more money online, buying another indicator, buying another system that promises riches. What I want to encourage is the only way to learn is through real education. There are no tricks. There are no magical powers or magical indicators or pixie dust. Education is the only way to succeed. And right now, the exponential growth in options is just too big to ignore, especially if you're trading stocks. So here's where I became obsessed with this strategy. Here was my wow movement. In front of you is a stock called SRPT. When I was on the floor, we called this guy Serpent. Serpent has event risk or jump risk. They are synonymous. It's the same thing. And all that means is a stock could close at 50 and open at 15, or close at 15 and open at 40. As a market maker, this is the exact email I sent to my market making desk. Stocks trading 1050. Barron's thinks it could be worth $26 if they get approved for their recent drug. A couple of weeks later, SRPT jumps like it did. I was able to take over $100,000 on this one trade alone. And after that, I was absolutely obsessed with this strategy. September 14, 2016, SRPT again. The FDA confirms that Sarepta's nemesis, Ronald Farkas, has left the agency. When you trade for a living, you learn that, especially on the stocks that you follow closely, what headlines are going to be news. Sarepta, SRPT, was going through the FDA. They were having their PDUFA date, which is when the FDA has to release information of approving or not approving a drug. 3 days before the PDUFA date, this headline comes out. Ronald Farkas leaves the agency September 14th. September 15th, I share a trade idea. This time I wasn't a market maker. I was with Active Day Trader. I owned Active Day Trader. And you can see 2 days later, again, stock jumps up to 60. Like September 15th, the stock will trade over $50, $60. So this was awesome. But the coolest thing is now my members were able to take advantage of this trade as well. Stacy here tripled his money very quickly. Taurus, you're the ambassador quant in my trading world. I didn't know what that meant. I had to look it up. I guess it's a Jerry Maguire reference. But here, Mark, long 3,500 shares from 28. Stock trades over 60. That's over 100 grand. So has anybody been told this? I was told never to buy options. Because talking to my clients, I've seen a lot of people who have been said, you know, we only sell options, we only sell options, never buy options. Buying options is so dangerous. Has anybody been told that? I've heard from many that you should never buy options, and I'm here to tell you, it's just flat out irresponsibly wrong. It's funny, really, because it shows how little most know. If someone's telling you not to do what half the market's doing, don't you think there might be some edge in learning that? That's how I think, at least. If someone's telling me that I should never do something, hey, that sounds like I'm kind of curious. If I learn how to do that, wouldn't that give me edge? That's why people say you should never buy options, because they don't know how to buy options. So let's get into some options education, because I want you to see how I present and see if it resonates with you. So this is a very general slide. And this is just showing that buying options on the left and selling options, just the difference. When you buy options, you're going to lose most of the time. Okay? You're going to lose most of the time. But when you win, when you make money, you need to make a higher percentage than you lost. Remember, we're risking $1 to make 5. Whenever you're buying options, you're long movement, you're long volatility. You want craziness to happen, and you're always long volatility. The opposite is selling options. Whenever you sell options, you're taking in a credit. You're going to win most often, but your losers you have to be very, very careful of. And you're always short volatility. Question is, how do I determine the direction of the market? I don't. I have no idea which way the market's going to go. I have absolutely no idea which way the market's going to go. I bet I'm the only guy who says that today. But what I do know is I do know how to value volatility. And when you're trading options, the only thing that matters is volatility. And that brings me to the next slide. Who knows what this is? Who can tell me what this is? I'm on limited time, so I'm going to jump in. This is the Black-Scholes model. These are the inputs to the Black-Scholes model. 97% or 98% of all options are valued using the Black-Scholes model, but it only needs 5 inputs. The 5 inputs are in front of you. 1, let's say we're trading Apple options. We know what the underlying stock price is. We know what the strike price is, that's given. We know how much time That's given. We know what the risk-free interest rate is. Use a 1 year, use a 2 year, they're the same anyway. The only thing that we don't know, the only thing that you need to figure out when you're trading options, the only subjective component is volatility. So when we ask about direction, direction doesn't really matter when it comes to options. Options is understanding volatility. If volatility is inexpensive, we want to look for places to buy volatility. If volatility is expensive, then you want to look for places to sell volatility in that given name. But all options are, guys, is volatility. If you're trading options without an understanding of volatility, you're at a significant disadvantage. It's the only thing that we want to figure out. So here's an example of volatility. Again, phony baloney stock, just as an example. On the left, a low volatility stock. Think of Microsoft. On the right is a high volatility stock. Think of, I don't know, what about JKS, CSIQ, YRCW, okay, solar stocks, gold miners, silver miners. Right now, iron ore, steel, oil companies right now. 30 days to expiration. Same stock, ABC stock, ABC stock. If it's trading at a 30% volatility, that means it just doesn't move a lot. Maybe the range is, you know, it trades down to 1950, it trades to 2050, it trades to 2030, 1980. It doesn't really move very much. So with 30 days, if I want to buy stock at $22, it's only going to cost me $100 for a 10 lot, or $10 for if I just want to buy 100 shares at 22. Because the market is telling us that the likelihood of it getting up there is very small. That's why it's only trading for a dime. But if we go into the high volatility area and think of these as this stock trades to 22, it trades down to 18, it trades 19, 17, 50, 20. Who knows where it's valued at? It's really volatile. Well, it's got a volatility of 70%, and look how more expensive it's going to cost. That's the difference of volatility. You can see the options are priced completely different, and it's only because of the expected volatility in the overall market. Can anyone tell me why the downside is more expensive than the upside? Why did I price the downside more expensive than the upside in this example? What do we think? Why are those downside puts more expensive than the upside calls? And as the answers come in, because it's limited time, I'll share the answer. Think of the two most popular option strategies. Why do most people use options? The most popular option strategy is your covered call. Buy some stock, sell some upside calls. I'm a market maker, guys. I know that people want to do covered calls. When you do covered calls, you want to sell stock. So as a market maker, I'm going to make those upside calls really cheap because I want all that edge. I don't want to share that edge with you. On the downside, guys, the other most popular option strategy is buying puts, right? People like to buy puts for protection. As a market maker, I know that. So I'm going to make the downside puts really expensive because I want all that edge. So you're going to see when you look at stocks, the downside is more expensive than the upside, usually. The one sector where the upside is consistently more expensive than the downside is going to be biotechs. SRPT, biotechs, $32. If we go $10 higher, it's trading $2 mid-market. If we go $10 lower, it's trading $1 mid-market. This is called skew, S-K-E-W. Biotechs routinely have a skew that's kind of angled towards the upside because think about, if you've traded biotechs, think about the last biotech trade that you made. I'm gonna make an educated guess that you probably bought some upside calls. That's how retail trades biotechs. That's why the upside is more expensive than the downside. So in my swinging for the fences strategy, we only need two things. One, we want stocks that move like crazy. And two, we need tradable options. And tradable options just means Give us a market to trade. 15 cents at 20 cents, great. We can transact. If it's 15 cents bid at $1 offer, we can't do anything with that. So that's not a tradable option. We need tradable options and we need stocks that will move. This is where my expertise is focused. And this is why I have edge in this trade. And let me explain why I have edge. Again, think of Apple. Apple has over 100 analysts that follow that stock. Apple has over 50 market makers that cover that stock and make markets on it. Because of all the market makers, because of all the analysts, because of all the liquidity, Apple, by definition, is one of the most perfectly valued stocks in the world. The more liquidity, the better value a stock is going to have. Now, if you look at a YRCW or SRPT, YRCW, let's use that. There's only 2 or 3 analysts that cover that thing. There's only 2 or 3 market makers that value the options. That's why there's edge. That's why I don't trade Apple. I have no advantage. Why would I want to go do that? Why would I want to wrestle with every institution in the world? I don't. I want to trade YRCW. I want to trade Halo. I want to trade SRPT. Here's another example, CENX from May 31st, 45 cents. We're looking at the 14 strike. Joe bought the 15s for 55 cents, picked up some more for 20 cents. The stock's trying to break 16, okay? It's really, really cool because 55 cents, he invested $550. He bought some more at 27 cents, and now the stock's trying to break 16, okay? Steven making 400%. Todd buying these for 17 cents. That's what we're looking for. Just trying to be real creative. I'm a big believer that the more creative that we can be, the better opportunity that we're going to have. I like these, CENX. They were trading 14s, and then later on they're trading $1. Got down to support, just a 100 period moving average on a daily chart and bounced. CENX, very cool trade. And then just more people celebrating. Yay. Okay. So are you guys following me? Is this all making sense, or do you see the potential of learning how to properly do this? Because what this really is, it's the foundation to trade options forever. And I didn't perfect this until I spent time as a market maker. And now clients routinely tell me, wow, why don't other people teach this? Or wow, I had no idea you can manage positions like this. So now if it's okay with you guys, I want to tell you how the investment works, because once learned, you'll be asking yourself, why didn't I start this sooner? Okay. Also, just to throw in, a lot of you guys have been trading for a while. If you've been trading for a while and not getting good results, you probably should stop and reevaluate what you're doing, because change is hard. I get that, but it's life, it's money, it's serious. And if things don't change or get worse, what then? So hear me out, and I think you'll see there's no BS, no games, just real information and someone who'll always be by your side. Here's the truth about trading. It's not complicated. When I hire traders, I'm not concerned whether they can learn the material. I'm concerned whether they have the temperament to be good at it. Are they stubborn? Can they admit fault? Are they coachable? I mean, imagine if you're the next testimonial that needs $1,300 more to double his account in a month on an $8,000 account. I mean, what would that mean for you? So swinging for the fences covers everything you need to find, trade, but most importantly, how to manage those positions. It's all about finding inexpensive options. So who is this for? Beginners, if you've never looked at options before, it'll take time. But if you're risking money in the market, options are too big to ignore. Again, if you're willing to put in the effort, this is for you. Same for those new to options and just learning. The information across the internet on options is confusing, and most of it is conflicting. You're not going to find anyone more qualified than I am to teach you about options. And for more experienced traders, it really comes down to, are you coachable? Are you willing to say what I'm doing might not be working and I can do better? Because this group is vulnerable, right? You know enough to get yourself into some trouble. So why wouldn't you want to properly learn how to buy little options, especially with the option market growing so fast? The more protected you'll be, the more opportunity you're going to see. And you get a unique opportunity to learn from somebody who's blazed a path for you. Lots of benefits to buying inexpensive options. These 5 will have immediate impact. For one, you can never lose more than you risk. You know right away, you don't need a stop. If you buy an option for 30 cents, you're in it until expiration. No such thing as a stop at 5 cents or 10 cents. I tell my clients, don't sell anything, don't sell nickels, don't sell dimes. Don't do that. Set it and forget it. You don't have to actively manage these positions. It's super straightforward. It's going to protect your overall portfolio because you're long volatility, and it gives you the foundation to trade options forever. Here's Paul. Paul sent me an awesome video that talked about how the Swinging for the Fences program completely transformed his trading. For Paul, the main benefits were twofold. For one, the obvious one, since joining, his account started at $6,000, it's now at 11K. But to me, what he said next in the video is what I take most pride in. He's out having lunch with his wife during the day. He doesn't feel the need to babysit his positions throughout the day or stare at the market. Because these positions, once you put on, it's over. And then the market's going to do what the market's going to do. So here's what you'll learn. And again, I want to keep things simple, very simple. Find the right trades, scan. You scan with a completely free tool. I use FinViz to scan, F-I-N-V-I-Z. It's a scanner, it's free, everybody could use it. We talk about putting orders in the market. We're leaving limit orders in the market. We have levels that we're willing to transact at. If those levels present, fantastic, great, we want those trades. And if those levels don't present, no harm, no foul. It's fine not getting it. The whole thing of fear of missing out, that's not real. That's something that we create in our own minds. And then after, manage your trades. And we learn how to do that by the 3 ways to manage your options position. 1, get out. Don't do that. 2, roll it into a spread, better option. But 3, learn how to manage your options by using stock. That's called scalping gamma. That's what we're really doing. We're scalping our gamma to get the premium of the option down. And that's what's thoroughly covered in this workshop. These are the comments I routinely get. Learning how to scalp gamma is an absolute game changer. Once you learn this, you'll be more consistent, more confident, and you'll put yourself in position for better results. So here's how the program works. Swinging for the Fences is a 2-hour on-demand workshop. It's yours to watch immediately. It goes over exactly how we search, how we scan for these trades, how we put the orders in, and how do we manage those trades, okay? I ran a survey asking people what they thought about swing. These were the 32 responses that I received. These are all 32 responses. But what I want you to see here is every single one of them is positive, okay? What is your favorite aspect? Gamma scalping, feeling confident, big money potential. I'm not going anywhere. Learn more, lots of review, monthly classes, clarity, awesome, fresh ideas, okay? As you can go see, 32 out of 32 positive, okay? This is what I want to show you. This is proof upon proof upon proof. Works for small accounts, no BS, common sense, a fresh look at trading, playing volatility. Learn to fish on your own. Learn to fish on your own. And you do that through education. The market's going to change. The market always changes. The market always grows. And that's why tools that people use stop working, because those tools don't grow along with the market. If you invest in education, that's how you can grow along with the market. It's not a trick. So this will change your perspective. If you're coachable, it does work. It's ideal for small accounts. Like, this is my favorite trade. A client put on a one lot for $32 and made $357 on a one lot. I've never seen that done. That was very, very cool. Another small account, 2,000, turns into 5,300. Here's Paul again, etc. So now let's get into the bonuses. So far, you get 2 hours of content, yours to watch immediately. Also, talking with clients, learning position management is so important. So I'm adding another bonus, 3 ways to manage your options position. This is 45 minutes only on position management. It's too big to ignore. So if I add them up together, you get 2 hours of swing and 1 hour, 3 ways to manage your options. Here's something that's a bit difficult to talk about, but it's the truth. I love working with clients and I receive unbelievably sweet feedback. The ones that make me the most uncomfortable, is when someone says, wow, you're a genius or you're so smart. Just to be clear, I am no genius. I am not the smartest person in this room. I know that definitively. But I do have an ability to manage options. That's what I do for a living. As a market maker, you're forced to be able to manage options to the penny to survive. That's what I'm offering you today. Maybe you can relate to Kelly. Kelly started working with me. I don't know when he started working. Oh, November in 2016. I believe you're more than delivered. So just another example of clients having really great experiences. Here's where the offer gets special. This Friday, there's a live options class. It's an hour long, and we're going to go over the entire workshop. It's this Friday. Everyone who takes part in the Swinging for the Fences program joins us, and if you can't make it, you'll get the recording, okay? We scan together, we find trades, we talk about trade management, we do a Q&A. It's your class, guys, whatever you want to do. But here's where it gets really special. Not only do you get a live class on Friday, at the end of every single month, because this is my flagship product, anyone who's part of Swinging for the Fences gets classes forever. So you get an options class live with me teaching options just like I was doing in the middle of this presentation at the end of every month forever. So at the end of 2 years, I hope you come to 24 classes. So if I add it all up, guys, you get the master class, it's 2 hours, 3 ways to manage your options position, which is 1 hour, and then you get the live class on this Friday, which was our last one for June. You get a live class for July, on August, September, October. I do this because I want you to know that I'm not going anywhere. There is absolutely no monthly charge for this whatsoever. It is a one-time fee. So now you have a choice. What I offer you today is one of those special opportunities. I'm not sure how else to put it. You're thinking, what's the catch? There is one catch, but I think it's fair. My best clients take action. Quick action gets quick results. So for the price I'm going to show you on the next page, it's good for a limited time. So value this opportunity right now. Unlimited classes from a professional market maker, 3 hours of real content that's yours to watch immediately, no BS at all. What's that worth to you? 12 classes, $100 a class is $1,200. $50 a class, it's $600. For anyone who moves forward, for anyone who this just resonates with, $297. You're all in, you get unlimited classes. There is absolutely no monthly charge. You do not need to be a member. Whoever moves forward today, you'll get 30-day membership included. Just click the box at checkout. There's a checkout box. In the Premier membership, every Sunday night, I'm going to share my 5 favorite Swinging for the Fences trades. I also share 5 or 7 other trades that are not covered in Swinging for the Fences. Those do need to be learned. I don't just buy Apple with a stop $1 lower. All my trades do need to be learned. I do this for a living. If we break it down even further, again, hopefully you'll see for those who are committed to learning about options, this is a pretty fair deal. It's activedaytrader.com/swing. And now I'll go through, I have 3 minutes left, and I'll go through and answer any questions you have. If I don't get to your questions, guys, that's my direct email. You can always email me at jonathan@activedaytrader, and I'm more than happy to email, just get back to you over email. Hey, Atul, so what's the smallest account you could have to start with options trading? So that's going to be broker specific. You're going to have to call your individual broker. The cool thing is if you're buying options, and that's what we're looking to do, right? We're just looking to buy 30-cent options. You can buy a one lot. It's $30. You can never lose more. Okay? Hey, Chung. So for the membership, how the Premier membership works is every Sunday night, I share my game plan. I'll show you what that looks like. It's a game plan that I share. It's exactly what I'm looking at for the week. And within that game plan, they're swinging for the fences trades. So this is what goes out every Sunday night with a 20-minute video explaining each trade. Here's the swing for the fences section. Okay, right now, the trades that we're in for swinging for the fences. Steel. Why are we in steel? Because steel is volatile. We're in iron ore names. Iron ore is volatile. And we're in oil names because oil is volatile right now. We want to be in the stuff that's moving around. I think a lot of people make a mistake in options where they want to sell expensive volatility and buy inexpensive volatility. That's not what I want to do. I want to look at what the market's doing right now and find value around that to make good decisions in the market. Atul, yeah, you got a paper trade, right? The cool thing about today is the link's not working. That's not good. It's activedaytrader.com/swing. Let me check the link and make sure it's working. So that would be pretty silly. /swing. Yeah, it's working. activedaytrader.com/swing. And when you guys go there, guys, just add this to the cart and you get 30 days of membership. You know, again, live option classes forever. Seems pretty fair. I do it so you guys know that I'm not going anywhere. What's my winning rate? Julian, if you have 10 traders, you're going to get 10 different results. Okay? You need to learn how to manage your trades. We actually want to trade at a very high rate, but I need to teach you how to scalp gamma, manage your trades with stock. Okay? There's no right answer to that. All right, so I think my time's up. Renee, thank you so much for having me. I know 45 minutes, so I'm done. If anybody has any additional questions, just email me directly. Cool.